The most important thing you could do is to just really have an open mind and to always hustle.
Welcome to the Real Estate Executive Thought Leadership Podcast, a fast-paced show featuring focused insights from executive thought leaders in the real estate industry.
In episode 2, we talk with Zachary Streit, Senior Vice President at George Smith Partners, a commercial real estate capital advisory firm based in Los Angeles. He's going to share his story of getting started in commercial real estate finance and how he and his team are continuing to close deals despite the economic trend. We'll talk about COVID's impact on the capital markets, what asset classes and geographies are most attractive, and how to nurture relationships with sponsors and capital partners. We'll also get into professional development, managing stress, leadership, marketing strategy, and how to thrive in any market. Let's get started.
Hi, Zach. Thank you for doing the show.
My pleasure. Thank you for having me.
Let's start with your professional and educational background. How did you get into commercial real estate finance, and what drew you to working with George Smith Partners?
I started my career over a decade ago. I think it's about 12 years ago now. What really got me into it was I was in law school. The CFO of a big REIT called Vornado, a fellow named Joe McNow, was lecturing to our class. And I loved what he said. Law was interesting, but didn't really speak to me. And I actually went up to Joe after class and said, hey, you are fascinating and your company seems fascinating. And I'd love to intern for you for the summer just to sort of get a taste of what the real estate finance world is like. And luckily enough, he took me in and that was my start. I never really looked back. I did take the bar and I finished law school. And then I immediately enrolled in NYU's Masters of Real Estate program full-time, got a job at the end of my first semester, started in January of 2008, which was a very tough time in New York, maybe not dissimilar to what we're going through now. That was the start of my career on the finance side, and I think it's been about almost a dozen years later now, and I'm still at it.
You're also a California broker and member of the bar?
I am. So I have a couple of California distinctions, member of the bar, and then a broker's license as well on the real estate side.
What appeals to you about commercial real estate finance?
It's extraordinarily exciting, especially on the, call it, broker advisory side. You see a very wide variety of deals, everything from land deals to construction deals to bridge deals to permanent financing deals. Today, you're starting to see some rescue capital deals as well. Our clients are really entrepreneurial sponsors doing institutional level deals. So another thing that really excites me is getting to work with entrepreneurs. I consider myself one. I would say the vast majority of my clients are. Every day you get to see sort of the cutting edge of their creativity, of their ingenuity, of their drive. And I think that all of those things really inspire me to try and be creative, to try and be innovative, and to try and move my business forward.
Let's talk a little bit about your professional direction. What does success look like for you in 5 and 10 years?
Success for me would be building or continuing to build a reputation in the marketplace that we execute for our clients are passionate, persistent, and persuasive, and really just continually and consistently help them achieve their goals. I work on a larger team at George Smith Partners. Malcolm Davies, he and I originate business. We've got a number of people supporting us, 8 folks. And I think success for us is really measured on trying to build the strongest reputation, the strongest brand in the marketplace, where entrepreneurial clients doing institutional level deals know to come to us, where we become kind of the go-to shop for them, and that we continue closing impressive figures. Last year, we closed about $1.3 billion in financing, which was a record for our firm. And the year before that, we did about almost $800 million. So more than just building on the numbers, which is, of course, great. It's really building the reputation and the brand as the go-to shop for what we do.
What professional development tools and resources are you engaging with right now?
I've done a lot of education in my history. As mentioned, I have a law degree and I have a master's in real estate finance. So I would say I am a perpetual student. And one thing that's kind of become really interesting in the way of professional, let's say, industry development in the COVID era is that there are more webinars available than ever before. There are more avenues to broaden and deepen your knowledge base than ever before. And I think that's an amazing thing. There are access to thought leaders and content in a way that there really hasn't been before. And I think, people are looking at COVID as a great accelerator. I'd argue that COVID accelerated access to information in a way that we haven't seen before. I've just never seen so much content and so much thought regularly available and accessible. So I'm trying to listen to as many webinars as I can, both during the day when I have some free time, just sort of streaming in the background, or when I go for runs a number of times a week. So that's definitely one thing. I'm an avid meditator also, because I think taking care of the mind is also a big part of growth and self-education. And finally, I read. I'm reading 2 books right now. One is Malcolm Gladwell's book, Talking to Strangers. While not maybe a business book per se, definitely has business implications into psychology and sociology and how we understand people and their motivations. And then I'm reading a book that a colleague gave to me called Contagious You, which is really all about personality and energy and drive and how you can bring that to your business, to your colleagues, and to your clients.
You alluded to this a little bit in your last answer. What helps you decompress from daily business?
Definitely running. I've taken up distance running for the last few years. I log around 30, maybe 40 miles a week. I had a streak during April and into the first week of May where I ran half marathons, not races, just distance, 5 weekends consecutively in a row. I've since dialed that back because that's kind of a lot for me. But I think working out and running helps for sure. I've got an 18-month-old at home, and getting to take him for a walk in the morning or in the early evening before he goes to sleep is a great way to decompress. And finally, like doing a couple Zooms with my friends, especially now since we aren't seeing them on a regular basis, is huge.
Let's talk a little bit about your company. Please tell us more about George Smith Partners and the target market and asset classes you serve.
George Smith Partners is a debt and equity finance advisory shop. We're based in the West Coast. I'm in Los Angeles. We've been in business for about 40 years. We do annual production volume of, I would say, about $3 billion a year. And as I mentioned before, our focus has always been helping entrepreneurial sponsors get their institutional level deals done. So what we mean by that is our client base are largely middle market sponsors doing deals that when and if they exit those deals, they will exit to institutions. So not to mom and pops, but either to big institutional buyers or large family offices or perhaps ultra high net worth individuals. 80% of our business is on the debt side and 20% of the business is on the equity side. The equity side can encompass traditional limited partner equity, of late opportunity zone equity, which we're doing a couple deals now and probably closed 5 deals last year, lining up co-GP financing for sponsors that need credit enhancement or dollars into their GP. We probably are more structured finance guys than just straight brokers. And that's why I like to sort of refer to us as advisors. A lot of the financings we work on are complicated, can involve multiple lenders. The vast majority of what we do is construction, heavy bridge financing, lands financings. So all of these require comfort and familiarity with a lot of cooks in the kitchen and a lot of moving pieces. In terms of target markets, I would say most of our business is Denver and West, being that we are based in Los Angeles. Most West Coast capital decisions, I would say, flow either through LA or through San Francisco. In terms of asset classes, I'd say you'll find us active in the asset classes that our entrepreneurial sponsor clients are active in. Those include multifamily, all facets of it, traditional multifamily, and then the niche spaces too. We've been doing a lot of single family build to rent as of late. We closed 2 deals last year. I think we're working on 4 or 5 now. That continues to be a really interesting sort of niche asset class that's seen a lot of institutional investment, including 2 large institutional deals last week that got done during the height of COVID, which I think is pretty amazing. We closed the largest ever purpose-built co-living deal in Los Angeles that I'm aware of. It was a 141-bed deal in East Hollywood, micro units as well. So multifamily is a big asset class for us. Hospitality is a big asset class for us. No question that it's facing some headwinds now, but we think that it's going to snap right back for the next 6 months to a year, and that deals will continue to get done in that space. And then I would say creative office is another big asset class for us, where we're working on 3 deals right now that fit that genre. And then I would say 10 to 15% of our business is just other stuff. So it could be a creative retail repositioning, which, admittedly is difficult to do now, self-storage, medical office, stuff like that.
What is GS Partners' core competency and driver of value? In other words, why do clients come to you?
At the end of the day, clients come to us because we care. And the fact that we care, we make a big focus on making sure that that permeates everything that we do. One example of how I would say we care that differentiates us from our competition is our team is a team of 10. I work together with Malcolm Davies. I mentioned before, he's a partner at the firm. He and I originate business. And we have 8 folks that work for us exclusively on our deal flow. That's a huge value add to clients. And that's a real big proposition that we care. The reason that is so important is for entrepreneurial sponsors doing middle market deals. Deals are generally complicated, and it really does take a village. And we provide that village to make sure that we are building momentum in the marketplace by answering questions quickly, efficiently, and by bringing to bear our full infrastructure, our full weight of 10 people working on an individual's deal. It's very rare to find that in the middle market today, where on a 20 or 50 or even $100 million transaction, you have that many folks that are exclusively devoted to your deal. So the 40 other people at George Smith Partners are working on different deals, but the 10 folks on our team are working on our deals. And the reason we can do that, and I think this is pretty interesting and unique to our company, is that we keep a pretty high percentage of the fee that comes in on every deal that we do. And so I can afford a pretty large overhead. And I think there's no greater statement to our clients that we care in saying, hey, we have a huge team that can come and service your deal. And it's unusual to get a team that is this large working on middle market deals. So I think that's one facet of showing that we care. And the other is, I was saying before, we try and be, in a very pleasant way, incredibly persistent, never backing down, and just incredibly diligent and hardworking and passionate, and sort of letting that come through, letting our clients realize that, hey, we're there with you through thick and thin. COVID is a good example of this. I don't think we've ever worked harder for our clients than we're doing now, despite the fact that transaction velocity is definitely down from what it was prior to the pandemic. But we still want folks to know that, hey, we're here. And if we had a deal that fell out as a result of COVID, we're not the type to just let it go. We're the type to say, okay, how can we restructure this? How can we get creative? Who can we go back out to? And how can we ultimately find a path to execution? In aggregate, we've built up a really strong reputation in the marketplace that drives a lot of new clients to us, and certainly a lot of repeat business from existing clients.
Let's talk about the capital market trends and the deals you're working on. How has COVID impacted the capital markets, and how are you adapting?
COVID was a huge exogenous shock, not just to the real estate capital markets, but to the broader economy as well. I mean, that's no secret. And anytime you have a shock of this magnitude that produces this level of unemployment growth, level of GDP negative growth, folks kind of get very circumspect and tend to slow things down. So there's no question that the capital markets slowed down considerably when COVID first hit in March and April and even in May. The good news for us is that we're starting to see green shoots on the horizon. There was an article this morning in the Journal about how hotel bookings are up a little bit, how a sort of number of folks going through TSA is beginning to inch up. You're hearing rumblings in the real estate capital markets of us getting closer to the CMBS markets reopening, which are an important barometer of what's out there, because so many folks want to borrow non-recourse and long-term, and many of the debt funds priced based on the CMBS markets. So I think that's also pretty great. But no question that we're still towards the end of that pause, and folks on the lending side and on the equity side sort of trying to figure out what's next. Is there going to be, and I hope there isn't, a second flare-up? Are things just going to open up again? Are we going to go back to normal? So I would say that folks are still sort of in an analyzing stage, going through their current portfolios, but also thinking about how can we play offense during this time? What's out there? Are there going to be distressed opportunities or not? I would say there probably are, but I don't think it's going to be wholesale market distress where everything tanks. In terms of how we're adapting, we started work from home probably about 10 or 11 weeks ago now. And I would say that we adapted pretty well. We use a lot of different technology at work, from Microsoft Teams to Slack to Rike to various other programs, Salesforce, et cetera. So having those certainly, makes it easier. Zoom is a big one. We're definitely on multiple Zoom calls every day. And so I think under the circumstances, I would say that we adapted extraordinarily well and very grateful for having a great and hardworking team, whether we're in the office or not. And also having folks that are willing to step up, even when times are, let's say, unique and a little abnormal.
What types of capital are available to commercial real estate sponsors today?
That capital is still available to sponsors today. There is a conception out there that there's absolutely no money available, that everyone's on the sidelines, that deals can't get done. That isn't true. We continue to work on deals and we continue to close them and continue to put them into application, which is really a very positive sign because that hasn't always been true, let's say, in past downturns. Primary sources of capital that are available today, the agencies, both Fannie and Freddie, as a source of permanent debt to multifamily, are still active in lending. Banks are lending selectively, and unlevered debt funds are also out there and lending. And then, of course, insurance companies are lending too. There was a period of time, I would say probably late March, where things were a lot slower than they are today. But from where we sit at the end of May, relative to January, I would say, 20-25% of lenders are active versus, what was before. So definitely we're slower. But the good news is, there is still capital out there. And the types of deals that we see getting done with that capital are refinances that have maturing debt where an extension isn't possible. That's definitely occurring. And then I would say purchases are occurring as well, particularly where there are hard money deposits that are at risk, where sponsors have gone non-contingent on their purchases. We're seeing those kind of continue to move forward. Underwriting is a little more stringent. There's a little more uncertainty with respect to what rents and occupancies and exit cap rates on different asset classes are going to look like. But that, hasn't completely stalled out the markets.
What asset classes and geographies are most attractive?
Without a doubt, multifamily and industrial in major primary markets are most attractive today. Those asset classes in secondary markets are still attractive as well. Office with long-term leases is going to be attractive as well if those leases are credit. Offices that have a high degree of co-working could face some challenges. We've also heard about challenges with respect to multifamily in the short-term housing space. But generally speaking, those three asset classes are strong. And to boot, there was a CMBS securitization, the first conduit deal that got done a couple of weeks ago was the Citi Goldman deal that featured properties primarily in those three asset classes. Low LTVs, good, stable leases, quality properties. So that can still get done. The asset classes that are, of course, a little more challenging today, without a doubt, hospitality and retail assets. Most hotel transactions, I would say, are really on pause right now. Very difficult to get a hotel deal done. Certainly a new development deal. We've advised in concert with our clients to revisit them. But even, a refinance of an existing deal is difficult. But I believe that as the sort of fog clears on COVID and travel and tourism and the economy ramps back up, you'll see deals get done there. Retail, it's a little bit of a tale of two worlds. Grocery anchored, pharmacy anchored retail continues to perform well, and rent collections in that space continue to support decent valuations and continue to support strength for that subsector. But there's no question that big malls and big box retail are struggling. And frankly, a lot of strip retail that has been closed or whose businesses have been impacted and they've been forced to adapt, they've been forced to scale back their offerings, are really struggling a lot. So I would think that those are the asset classes where, maybe some of the opportunity lies. But those are the areas where, it's been unfortunately painful for a lot of the sponsors.
Your team closed some notable transactions recently.
The most recent transaction that we closed was actually a bridge loan on a flex office industrial property. And it was pretty cool. This was a pre-COVID deal, and we closed it a few weeks ago during COVID. It had Abbott Labs as a tenant. So that's kind of a pretty timely deal. So we're proud about that. We also closed maybe the last bridge loan on a hotel financing, or one of the last hotel financings to occur before COVID. That was a refinance on a Radisson Red hotel up in Portland. And what was pretty staggering was that COVID was never really in the conversation on that deal, even though, had the closing been pushed a week later, it might have been an entirely different view on it. Last year, I think it's worth noting, Malcolm and I closed the largest deal in our firm's history. It was a $460 million ground-up construction financing for the Ritz-Carlton hotel, condominiums, and office space up in Portland. So we're very proud of that transaction. In terms of other deals that we're working on now, we have a deal closing this week. It is a acquisition of a land site for a pre-development multifamily deal. It's going to be a 1,000-unit multi-deal in Southern California. We're doing that with an unlevered debt fund. So it's pretty interesting that you can still get a land deal done. We have 2 multifamily construction deals that we're working on also here in Los Angeles. One has been an application for a little bit, and we hope will close next month. And the other, we actually got a signed term sheet on this weekend. So it's pretty interesting that, you're seeing term sheets get signed. Both those deals happen to be in opportunity zones, and both of them happen to be capitalized with opportunity zone equity, which I think is significant because we are seeing a pause from maybe traditional equity sources to some degree on new development deals. But I think that isn't true of opportunity zone equity, which is kind of a special class of equity and has a very long time horizon on it. So I think those deals are still getting done as well.
What is the primary challenge in closing deals with complex capital structures?
What isn't challenging about it? But it is what makes us tick. It's what gets us up in the morning and really motivates us. Challenges include having to tell a pretty complex story and having to sell that story into the capital markets. Having to work with multiple stakeholders can be challenging at times. Each may have kind of different interests and sometimes competing interests. Look, packaging and underwriting a complex deal takes time. It takes quite a bit of effort. It requires a lot of focus and a lot of concentration from multiple folks. And that's multiple folks on our team. That's multiple folks on the sponsors team. If you're dealing with a construction deal, you've got to get your lender involved and the GC involved and sometimes a project manager involved. And then, there's an equity part that needs to be involved. So you need concerted effort and just a consistent focus on momentum from all parties involved. And then it's about getting into the nitty gritty. And then it's about structuring and ensuring that all folks sort of understand the deal and can work in concert together in terms of getting it towards closing. So, I would say those are the challenges. I think I'd also note that there's nothing more rewarding than getting a tough deal over the line and knowing that you're able to bring multiple constituencies to consensus and to actually get something done.
How do you build and maintain relationships with capital partners?
For us, it's just about a constant dialogue. It's almost no different than how we build relationships with our clients, just trying to be in constant communication with them. With respect to capital sources in particular, we work hard to make sure that we screen the assignments that we take on to begin with. So we don't just take on any old assignment and then, send it out to lenders willy-nilly. We spend a lot of time getting to know our sponsors if they're new clients, understanding their business plans. Their existing clients, we'll spend a lot of time on their business plans. We'll make sure that we will put together a pretty comprehensive offering memorandum and Excel model that we send over to capital sources so that they're not looking at something that's half-baked. They're not looking at something that's hastily put together. They're looking at something that's really well thought out and has had, the benefit not only of the sponsorship team's work on the deal, but also our team's work on the deal. And we will try and anticipate as many questions as we can that capital sources will ask. That sort of two-pronged effort of one, maintaining a close dialogue with them at all times, and two, making sure that the product and loan requests that we put in front of them are really well put together and really well thought out, just helps foster deep relationships. And Malcolm jokes, it's not just who you know, it's how you know to get them to do the deal. A big part of that are those two things, just making sure that we're in front of them constantly and making sure that we are putting quality product in front of them as well.
Let's briefly touch on leadership. How would you describe your leadership style, and how do you motivate your team?
We do the best we can to sort of set a tone at the top. I would say Malcolm and I hustle incredibly hard, and we hope that that doesn't only show our clients that we care, that it also shows our team and our company that we care also. And hopefully that paradigm of being passionate, of being persistent, pleasantly persistent, permeates down through our team. We try and be extremely inclusive, and we try and empower the folks so that they feel like they can take ownership of assignments. They feel like they can step up, so they feel like they can interact with clients and with capital sources. Because we know there's a limit to what we can do personally, and true leverage, if you will, is in having a team and having them be able to produce exponential amounts of work relative to what we could do. So I'd say we do our utmost to really empower folks and ultimately create them into leaders. So wherever their career paths take them, they feel like not only they get a good technical education working with us, but they got a good bigger picture education too, and that they've been imbued with the skills to succeed wherever they go. And in terms of how we motivate our team, I think it's that same tone at the top. Just say, hey, we really want this. We want to surround ourselves with people who really want it also. And I think that that helps motivate people, and especially knowing that there's no limit to how much they can step up, or we're not going to put a glass ceiling on them in terms of what they can and can't do. And so I think that ability to learn, that exposure to deal flow, which I think the team gets and has gotten working with us, has been a huge plus.
Has the public health crisis changed the way your team works?
Yes, to the degree that we're not kind of in the office together. And Malcolm and I traveled a lot pre-COVID. And so, maybe we were only in the office, a couple days a week, but the rest of the team was in the office almost every day. And so, that has certainly changed. But I would say that we've been able to offset that change. Zoom meetings, Slack, twice a week team meetings, as opposed to say, once a week team meetings. And that's, in addition to the 2 company-wide meetings we have every week. So we are seeing and talking to each other regularly through the utilization of technology. It's made us all a little bit more efficient because we don't have to deal with commutes right now, and we aren't getting on planes. There's more time to do things. And we've definitely begun exploring some new technologies to help step us into the future and to hopefully better our businesses.
Let's talk about marketing strategy. Do you actively generate leads, or do you work mostly on referral business? And what channels are you finding most effective in reaching prospects?
A lot of our lead generation was done through conferences previously. We've replaced that through hosting, fairly regular webinars, which ends up generating, a lot of leads. Email blasting, sending cold emails out, sometimes making cold phone calls, generate a lot of inbound leads from a variety of sources, existing clients, and then other stakeholders in the industry, be they a wide variety of service providers, research service providers, attorneys, accountants, friends that we have, other brokerage houses that don't have in-house capital markets debt and equity. So there hasn't been a kind of silver bullet or a one-size-fits-all for this. It's just about constantly hustling, constantly trying to stay in front of people, and constantly letting everybody know that they matter. And also realizing that you don't always know how a lead is going to come your way. So you might be having a conversation with somebody that you think is a waste of time, or somebody may send you an email and you really don't want to answer it. And I've found that sometimes by giving somebody the time of day that maybe otherwise wouldn't have, business flows from it. So I would say the most important thing you could do is to just really have an open mind and to always hustle. And I think that if you do both of those things, then of course execute well for your clients, you'll create a positive feedback loop with respect to marketing and business development that just continues to feed on itself.
Are you leveraging inbound content marketing for lead generation?
We definitely try to. We email blast the webinars that we're on. We author articles. So we are in periodicals, and we will send links to both our webinars and articles we author to sort of let people know sort of what we're seeing and what we're thinking and what strategies might work and hey, what might not be working. So I definitely think that content is extremely important. And going back to my earlier point about the thirst for content, the thirst for knowledge, I don't think it's ever been greater than it has been during this COVID era, because people are home and they don't have access to conferences the way they used to. And so the more of that we can put out there, the better. I'd also note that we have a pretty interesting perspective on the market because we sort of are on the front lines of doing deals, and it's easy to get removed from that within different facets of the industry. And so I think that folks appreciate kind of the perspective that we bring and the market updates that we bring. I mean, I don't think a week goes by where I don't have a pretty large number of calls that are just folks saying, hey, Zach, what are you working on? What are you seeing? How is it changing week to week?
Does social media marketing play a role in your practice?
Social marketing plays a pretty big role in our practice. I would say Malcolm and I are pretty active on LinkedIn, which, I continue to find is a tremendous medium. I don't think it's one you can just build overnight, but I think I have 8,000 or 9,000 connections on LinkedIn. And so I try and post maybe once or twice a week on there. I use it as a tool to reach out to folks that maybe I don't know. And again, it's no silver bullet, but it has yielded fruit for me. An interesting change for me during the sort of COVID areas, I've kind of become a Twitter guy. I'm still sort of figuring out the ropes. I enjoy reading people's feeds and I enjoy commenting on them. And, I think I'm slowly building kind of a real estate and business network on Twitter. So I would say social marketing is a big one for us.
Are you engaged in public relations?
Our firm does some PR. And so you will see we have a YouTube channel. So that's out there. You'll see articles come out either from myself, Malcolm, or other folks in the firm. You see us speaking on webinars a lot now. Prior to COVID, and certainly when, sort of the dust settles on it, I think you'll continue to see us at conferences again.
What is the most crucial element in positioning your firm's brand? And what types of deals do you see you and your team closing in the next half of 2020?
Malcolm and I have really been focused on the sort of mission statement of helping entrepreneurial sponsors get their institutional level deals done. I would say more than anything else, we're trying to position ourselves as the guys in the market that can get those deals done. Getting that message out there is crucial for us. And just continuing to educate the market that, we're the guys that can do these deals. And these deals can range widely. And, maybe I should have mentioned that before. On the smaller end, we can do stuff that's maybe $5 or $10 million. And then on the larger book end, we closed a $460 million loan. And I would say the average deal we work on is probably $40 to $50 million. We are trying to solidly cement ourselves in that space. Is that if you're an entrepreneurial sponsor, and you're doing an institutional level deal, we're the guys that can help you. To that end, what sort of deals do we see going on in the back half of 2020? Definitely think you're going to have some relief capital deals in the kind of hospitality and retail sector. We'll be active on those deals and kind of helping folks get them done. We're already working on a few of them. I expect that to only continue. And those deals could take a few different incarnations, let's say. It could be note purchases, recapitalizations, and rescue capital situations. It could be helping folks finance the purchase of on-market or off-market assets. I don't know how broadly you'll see those elsewhere. You'll see them a lot in hospitality and retail, but it's really hard to know to what degree you may or may not see them in other asset classes. Beyond that, I do think that you're going to see construction commence for deals in the back half of 2020. And I think that's going to be especially true in multifamily, where there continues to be affordability issues. And there continues to just be a lack of housing that hasn't kept up with supply. Single family build to rent is going to be an amazing asset class because COVID may be pushing people away from densification and more towards a less dense atmosphere where maybe you have your own backyard or your own garage and you're not living in a stacked vertical multifamily complex. I think we're going to see continued activity in the multifamily sector. I think you're going to see some sort of interesting sort of COVID sort of fallout type transactions as well.
What is one closing insight you'd like to share for real estate industry executives targeting growth?
Don't give up. It's really easy in a time like this, and even when times are good. But I think it's easy in a time like this to just say, you know what, there's no reason to work right now. Transaction velocity is very low. Unemployment is high. We're going to have a pretty rough quarter in terms of negative GDP growth. That's okay. Those are challenges. We've weathered storms before. We'll weather them again. Real leaders are born out of these times. It's that persistence. It's that passion that, you don't just want to be a fair weather guy. You also want to be the guy that's going to be there for everybody when things are tough. So I would say same way you could look at it back in 2019, oh my gosh, there's so much competition. It's so hard to get deals done. Sponsors are going direct to banks, or there's a lot of other, advisors they could use. I would say don't let those big picture items discourage you. Work on what's directly in front of you and just be an eternal optimist and hopeful, and realize that tomorrow can be better than today. That's sort of always been, I think, the American way. I think that's what's always driven entrepreneurs. So I would say, especially in a bit of a challenging time like this, just stay positive. Don't let this get you down. And I think good things come of it.
Thank you for being our guest, Zach. This has been a lot of fun, and I appreciate your insight and experience.
Wow. Excellent questions. All right. You the man. I really appreciate it.
Thank you for listening. Please like and subscribe to get updates on our upcoming podcasts. Share the inspiration.